Good morning, everyone, and welcome to the Money Control live stream. You're watching markets with Santo and CJ. Well, the big Fed event is out of the way and it's time to disco. Just kidding. It's not that time yet for the markets, but we have a lot to digest on the show today. Starting off with Tata Motors June quarter numbers that came out yesterday after market hours. Clearly, Santo, very poor results. But I think, in my opinion, probably the stock price was already reflecting it. We have seen quite a lot of damage on the price over the past couple of months. So clearly, I think investors were anticipating some numbers like this, although the company's numbers were below analysts' estimate across the board. I mean, you talk about revenues, you talk about margins, you talk about a net loss. Again, another quarter of net loss for the company. So clearly, poor numbers, no doubt about it. But I think, from my perspective, I feel the market may choose to look beyond Q1 and concentrate on the improvements that lie ahead after Q2. If you look at the commentary that is coming in from the management, they have suggested that there has been a significant improvement in chip availability in the starting off from July onwards. And of course, if you look at globally also, semiconductor prices have been coming down, which basically suggests that supply is clearly picking up. So that should be a big booster for the company's subsidiary JLR, which has been suffering a lot because of production issues. Apart from that, JLR's order book also is almost near record highs at more than 200,000 client bookings. So clearly, demand is not an issue. Supply was the main issue. And I think clearly, if the chip issue sorts itself out, Santo, I think you could see the demand, taking its, own image. And then China also is reopening, which is also a major market for JLR, almost 30% of sales. So that should also be quite a positive. And lastly, on the margin front, we have seen that commodity prices have come off quite sharply, not only at home because of government intervention, but in international markets as well. So that should also aid margins going beyond September quarter onwards. So lastly, for me, Santo, a fast-growing stock with the companies, of course, the promise that they will be net debt free or net debt zero by FY24, I think makes this a very attractive stock after the correction that we have seen.
Well, CJ, the stock is continuing to bleed at the net profit level.
Yeah,
It's been the case
Absolutely.
for quite some time now, despite all the positive sentiment about the stock, at least last year. You're not seeing that really translate into the bottom line. And if you look at how the price has moved over the last almost 6 to 8 months, it doesn't look as if the market is looking forward really, beyond. Typically, markets tend to discount these things pretty well ahead of before the changes happen. If you are to go purely by stock price, I don't think the market appears to be very convinced at this point. Secondly, you mentioned about JLR. So one of the factors clearly was that the product mix, the poor product mix was also one of the reasons for the margin deterioration there. But there's one more point that CLSA has made. It's a fact that JLR's peers like Mercedes and BMW, they've been having pricing power. So, while JLR did take some bit of hikes, it was still not good enough to cover the increase in raw material prices, which some of its rivals have. And also about JLR, at this point, we are still talking about a slowdown in the US, and we are betting that China will reopen. Of course, there will be some bit of pent-up demand there, but you're also talking about a slowdown in Europe as well. So, the main markets for JLR at this point in time don't look all that rosy, is how I would put it.
Yeah, I mean, of course, China remains the X factor for me, Santo, because the fact that it almost constitutes a third of the sales, and therefore, if you look at the June retail numbers in China, there was almost a year-on-year growth of 30% and a week-on-week growth of almost more than 20% in June retail sales for passenger cars in China. So clearly, if that market comes out very strongly, then maybe it will be able to offset some of the slowdown that is expected. Mostly in Europe. I would still not say that the US is done and dusted, because there we are seeing slowdown, but the luxury segment or the premium car segment, in which JLR largely functions with rivals like Mercedes, they are still seeing quite decent amount of demand out there. So I think Europe, of course, is a big issue, but I think if China comes back strong, then it could be able to offset a lot of the demand loss there. That said, let's quickly move on to check out the trade setup for this morning. And I said it's the time to disco, but I did not mean it literally. But if you look at the Nifty futures on the SGX, it does seem like the market is in a mood to disco today. If you look at the SGX Nifty, it was higher by about 100 points at this point of time, clearly tracking the late surge we saw in Wall Street overnight, as well as the positive opening for Asian markets. Wall Street surprisingly ended higher after, even though the Fed has raised interest rates by 75 basis points. A lot of investors read into Jerome Powell's commentary in the press conference quite dovishly. Now, why dovishly? Well, there are a few factors behind that. I mean, Paul said that at some point of time they would have to look at, a slowdown in rate hike depending on how inflation, evolves going ahead. So that has clearly given hope to markets investors who are expecting growth to slow down going ahead. They're expecting high frequency data to show that US is edging towards a recession, and that will force the Fed's hand. And I think that, Santo, seems to be the best bet of bulls out there at this point of time, that probably the Fed slows down, there is a recession, and then maybe two quarters forward we start seeing first rate cuts going ahead.
I think it's almost now become some kind of a pattern there, CJ. First threaten a 75 bips hike and then give a 50. Market is then quite cheerful about that. Here again, you had some chatter about 100 bips hike, and eventually when it comes to 75, market is quite.
But I think Fed was also very quick to dismiss that. I mean, a lot of Fed members just came out open in the media.
But you sow the seeds of doubt, right? Once a number is floated, then some people were still saying that it might be an outside possibility. So that's also there. So when that doesn't come through, the sentiment improves significantly. But that said, interest rates continue to go up, and at this point in time, I think market is looking for all the positive. It's cherry picking the positive part. But you also have to remember that interest rates are going up. The Fed will shrink its balance sheet, even if it is gradual. It's continuing to shrink. That means much less liquidity. And let's not forget, there is still the slowdown looming in the US at this point in time as we speak. So it doesn't seem a very rosy picture, but for now you can't argue against the prices, CJ. Prices are rising, and if you stand in the way of this market, you're just going to get knocked down.
Well, Santo, I think my concluding remark on that would be the fact that, of course, you could read the Fed statement or Powell's statement the way you want to, depending on what your perspective is. But the only thing that stood out to me and should provide some comfort to markets in general is the fact that he alluded to the fact that the balance sheet runoff or the quantitative tightening that the Fed is doing in terms of selling off a lot of the bonds that they had bought during the pandemic, that will take at least 2.5 years, right? So that goes to show that the liquidity withdrawal from the markets or global economy is going to be quite gradual than what market was expecting earlier, because market was concerned that such record high inflation means that the Fed will quickly, reduce this balance sheet size as well as raise interest rates, and that could be a calamitous combination for stock market. So I think there should be some relief on that front at least.
Well, with that we move on to the stocks for the day, starting with Maruti. Again, not really great set of numbers there.
Another auto name.
And again, not unexpected either, but two things here. One is just look at the stock price, the way it's been performing through this year, which means that market is pretty hopeful out there. And even the management commentary in the analyst meet was quite positive. The order backlog is at a record high of 350,000 units. And there's something which even brokerage house Bank of America Merrill says that this demand is strong, and also the sentiment around the new upgrades as well as the new launches are pretty positive. So this is something that should kind of help drive the upside in Maruti prices. Now, new Brezza has a backlog of almost 70,000 bookings, and Grand Vitara has a backlog of about 20,000 bookings. Besides that, the company is saying that falling raw material prices clearly should help margin in the quarters ahead.
Sorry.
No, please go ahead.
No, please continue.
No, I'm saying some of this is already reflecting in the stock price at this point in time.
Well, it's funny, Santo, that the market is not looking to the future for Tata Motors, but is looking to the future for Maruti Suzuki. Probably of the fact that maybe Maruti's valuations were probably much more comfortable than Tata Motors for a lot of investors out there to digest, and also the fact that 2021 was so great for Tata Motors, but it has been a disastrous year so far. But I think if you look at Maruti's earnings momentum, I mean, a sequential basis, the earnings have been quite harrowing. Across the board, you have seen double-digit decline almost on all parameters, and I think the cost pressure as well as the low volume offtake in this quarter is something that really concerns me, and that is why I have said it time and again. I would still want to hold my horses on the entire auto volume recovery theme that a lot of people have been talking about over the past 2 to 3 months now. And for me, there are other brokerages as well who have expressed the skepticism, but new model launches don't always guarantee you that you will get great demand for it. Yes, 70,000 bookings are there, but if waiting period is too long, then incremental bookings might suffer. And we have seen that in the case of other passenger car makers as well, wherein waiting periods used to stretch for 8 to 9 months, 10 months at one point of time last year. So clearly, I think the auto volume recovery or the passenger car volume recovery for Maruti Suzuki is something to keep an eye out on for me. That said, one stock, where of course valuations have become comfortable, but the earnings momentum just does not stop, and that is Bajaj Finance. Another blockbuster set of numbers which should really provide a lot of comfort on valuations for people who have been very skeptical about the company's high valuations, just like you, Santo. I mean, highest ever customer additions that a company has ever seen, strong AUM growth of more than 30%, strong loan growth. I think it disbursed, Santo, almost 88,000 loans per day in the June quarter. That just goes to show the strong demand that is out there, at least for Bajaj Finance, specifically. And I think I like this comment that came in from BOFA, earlier this morning, Santo. They said that Bajaj Finance is a buy on the premise that there is strong growth along with a very comfortable capital buffer. So basically what you're getting is a very fast-paced, loan growth company with very much, very likable asset quality. And I think in a financial services sector, that is the best combination that you can ask for, and probably why valuations are at a premium that they are.
Well, as to the point about valuations, CJ, they're still lower from what they were in October, and as recently as
we have seen almost a 20% correction in the stock.
Big correction. CJ, even after a strong set of Q4 numbers, the market hasn't really warmed up to the stock, right? And it was only expected that this growth could be sustained for a while, but still market is not, investors are not willing to back the stock at this point. At least that's
that's surprising for me.
One gets looking purely at the stock price movement. So a couple of things flagged by Abhishek Kothari, the banking analyst at CNBC TV 18. Now, one of the reasons for the high valuation that market used to give Bajaj Finance was because the growth in its loan book was very rapid. So if you look at the quarter-on-quarter growth in the loan book back in 2018, 2019, it used to be 10%, 12%. Okay, that has now slowed down to around 3%. So that's clearly a slowdown.
So probably a size also has a lot to do.
True,
with that.
size has, but then when you market values it highly, it is giving a premium for growth, the rate of growth. So that has slowed down. That is one. Secondly, the average ticket size is also declined a bit. Thirdly, the yields have improved, and what Kothari says here is that probably it could also mean that the bank, Bajaj Finance, is now taking on more risk to deliver on growth. So these are some of the things to keep an eye out for, CJ. Well, the next stock on the watch list is United Breweries.
Oh, your favorite.
Yes. Decent set of numbers. The growth in top line has been pretty strong, CJ. One could quibble a little about margins, but and partly the strong numbers were expected, considering that June quarter always is usually good for beer companies, and the company has clearly delivered on that. Almost a 40% jump quarter on quarter.
And I think it was above Street's estimate as well, if
exactly.
I'm not wrong.
So that clearly the reopening of the economy is working out well for United Breweries. Volume growth had taken a big hit over the past few quarters, but now that seems to be a thing in the past. Besides that, outlook for beer as a product is very, very positive. So CJ, this is one stock to keep an eye out for.
Well, Santo, I think of course you can't fault the company for the top line growth that it has shown. But I think we are in a phase in this market where investors are laser focused on profitability, and I think that is where the company scores quite low for me. I mean, clearly that weak margin performance might take its toll on the stock today, and also overall the pricing environment is just not in favor of alcohol makers at this point of time. We are seeing that with United Spirits as well. So clearly, I would expect a muted, reaction to the earnings of the company.
Well, last stock on the watch list.
I think, Santo, we should just check out the market before we head on to the last stock of the day. If you look at it, it's a very positive start for the market. The Nifty is higher by about 0.8%, the Sensex up by about 0.9%, almost a 500-point uptick on Sensex. So clearly a very positive start, Santo. I mean, Fed rate hike was
you
probably
could see
a
further, and today's also expiry day. You could see more of short covering of positions, considering that we had some sluggishness earlier on this week. Bajaj Finance is up close to about 3%.
Wow,
positive response.
That's a very, very positive response from the market, clearly.
Strong market breadth, 1,477 gainers and 244 losers. So mid-cap and small-cap stocks are in demand early on. In the day.
Exactly. And you look at the market breadth as well, quite positive, about 1,500 stocks on the uptick. But the mid-cap space is, I think, lagging behind the large cap space a little bit today, Santo. If you look at the Nifty Midcap 100, up about 0.6% as compared to about 0.9% uptick on the Sensex. So clearly the momentum at this point of time with the large cap stocks, but we have to wait and see whether this sustains or not later in the day. Of course, you have Tata Motors, Santo. Clearly market is not happy with that 5,000 crore loss number, down about 1.4% at this point of time.
Well, the last stock on our watch list this morning is EIH. It's been a steady performer, CJ, over the last many quarters. Although top line numbers are yet to reach the pre-pandemic levels, despite that, the numbers the company posted for the June quarter is the highest in almost 10 quarters. And more importantly, there's been an improvement in margins as well. Big improvement, that 24% has been the operating margin for this quarter. The stock had a decent run this year, but again has run into profit taking. It's been one of the laggards.
Expected, I mean.
Which is it's been one of the laggards in the hotel sector so far. Right. But clearly, with the economy reopening, travel picking up in a big way, I think this is one stock to keep an eye out for.
Well, Santo, you can't pick much holes in the earnings performance clearly for the first quarter. But I think the only point that I have made, across the board for other hotel companies, that I'm just not sure how much discretionary spending will continue going ahead. We have seen a good amount of pent-up demand in the hotel industry over the past 2 quarters, but that pent-up demand should ease itself out in the coming quarters. And overall, with high inflation, with consumer wallets being squeezed, I'm not so sure how much vacation is going to be the top of agenda of a lot of families and households out there. So clearly, something to keep an eye out on this stock.
Just, I think the point you had made earlier about US, where the luxury segment has been pretty strong. Probably we are seeing some kind of a trend in India.
Maybe that's
also
the K-shaped recovery that everybody has been talking about, where the better off have been doing well, where the worse off have not been doing that well. So maybe that is the dichotomy that the Indian economy has at this point of time, and nobody can do anything about it. That's it, Santo. I mean, one of our viewers, Abhimanyu Vyas, has a question. Do you think sustained high oil prices and the long Russian war situation could assist EV car manufacturers? And what are some companies investing heavily in the EV research? I like to take a first dig on this.
EV is pretty much his stuff, yeah.
Yeah, I don't think EV is dependent too much on oil prices. Of course, higher oil prices and the cost of ownership does pull a lot of incremental customers, but generally EV is something that you're seeing as a trend develop regardless of high oil prices. Yes, it has been in talk a lot recently, but this is a trend that you're seeing with Tesla for the past 4 or 5 years now, and now because of that demand, you're seeing other companies also get into it. You have seen Ford announces plans for electric vehicles. One of his most popular cars in the US is now going to turn electric going ahead. You have JLR, of course, coming out with almost 9 to 10 models in the next 3 to 5 years. You have Tata Motors at home. You have Maruti Suzuki looking to get into it by FY25 once it's sure that there is profitability out there. So clearly, a lot of companies have realized that EV is the next big revolution going ahead. And it also makes sense because the cost of owning an EV is steadily and surely coming down. If, of course, recently we have seen commodity prices go up, but overall, eventually, in the long term, you would expect EV prices to be lower than internal combustion engine prices.
Well, CJ has laid it out very well for you, and I think CJ, when it comes to ownership, the cost, the affordability is a major factor, and that right now is not so much in favor of EV at this point. But once you overcome that hurdle, I think that's where the big difference.
It's the inflection point for you.
Yeah, and infrastructure, charging points. Do you have enough charging points? More people would like to own a EV.
That has been the biggest struggle, right? We are all aware of those LinkedIn posts where people were getting up their Ola Electric to their houses to actually charge the the scooters. So clearly, I think infrastructure remains the big issue. Once the infrastructure comes in, we have a lot of companies like Power Grid working towards that direction. A lot of Tata Group companies are working in that direction. So clearly, I think it will be something that has to grow together, and it will not be something that EV demand grows first and charging infrastructure grows later.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and please do let us know about your feedback. Post it in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live with all the day's action at 3 p.m. Till then, have a spectacular trading day.